I only specialize in what I call the really great bubbles.
Lana. Lana. Lana!
What? Danger Zone.
What is going on, YouTube? It's Brendan from Market Makers. We are in the danger zone for Bitcoin. What does that mean? And how much do you love Archer? What a great show. Guys, we need to talk about the cryptos. I made my SPX video, the Russell video yesterday. Also went over silver in that video. Check that video out if you want to hear a lot more about the macro market direction. I do something different in this space. Many YouTubers only track crypto as it exists in the crypto space, which, as you guys know watching this channel, has been the longest bull run in stock market history. Crypto has never lived in an equities bear market, which is where you are now. Euphoric rallies in the market, they capped out. We shorted the indices the other day, went over that in the videos. It's on our Discord. If you want to check out our Discord, it is half off. That link is in the video description. But guys, before we kick this off, I want to do a little bit of a PSA, what we call in this country a public service announcement. Guys, you know, my view may be much more harsh or stark than many of your views about what's coming in the economy. I do think we're going to be in full-blown recession here in the summertime, and I just want to tell you this from my experience, okay? I'm 44. I was working at an investment bank for the great financial crisis. I was trading in commodities in the dot-com crisis. I want to tell you what's coming, and what's coming are body bags. Look for more companies to fail this year. The recession will be in full-blown effect by summertime, according to the bond yield lag, okay? So you're looking at a full-blown recession, and I'm telling you this specifically in the crypto space because you've already seen the casualties of FTX, Voyager, Celsius, Genesis, and I'm sure there's other ones that I'm missing in there as well. But there's going to be more exchanges that fail. Do not use any exchange as a permanent place to store your funds, okay? Only use on an exchange what you are going to trade with. And then if you make money, pull your profits off and only keep on the exchange what you could afford to lose. That's how I view this, okay? Because again, my view may be starker than many of your views, but I've been through this. I was working at an investment bank when other investment banks were literally failing around the world. So just be aware of that because economic conditions are primed to get much worse. So we had big tech report their worst quarter ever. Okay, so you had Apple had its worst quarter since 2016. You had Microsoft slowest growth since 2016. Google missed on the top and bottom. If you think the economy is going to get better this year, that's fine. That's your view. I do not. I've seen this cycle twice before in my trading career. It's going to get a lot worse. Now, having said that, BitGet has been our sponsor since we had like 4,000 subs. We were repping BitGet before they even got big. None of these guys that all have BitGet now, were even around with BitGet. So lots of the exchanges are doing withdrawal limits. Be aware of these limits. One big change BitGet did this year for the 2023 link, and this is for everybody, is they now require a VPN. So if you are new on the link, if you join today on BitGet, you have to use a VPN. If that's not a problem for you, that's fantastic. Our BitGet link is in the video description. However, many of you have been messaging me, is there any place I can trade without a VPN? Maybe your connection's too slow, maybe whatever reason, I don't know, you don't want to pay for a VPN. Well, if you used our BitGet link last year, you don't need a VPN. You get annoying pop-ups and everything, but you don't need a VPN. But if you want to trade on an exchange, I went out and talked to BingX. This is another crypto exchange. It's basically a skin of BitGet. Okay, they're probably not going to like me saying that, but it's a skin of BitGet. So if you like BitGet, BingX does not require a VPN. Couple of cool things BingX is doing with our link. You do get the exclusive up to $8,000 bonus. And then you also get spot free trading. And on top of that, they have a $50,000 withdrawal limit daily, but it's not cumulative. So you can withdraw like $1.5 million a month. So for most of you, that's probably all you need, but that is nice to have in your back pocket because all the exchanges are afraid of runs on the exchange. That's why they're implementing these withdrawal limits. So be aware of that, guys. crypto exchanges are centralized, okay? So they're trying to protect themselves from what could be coming, and in my opinion, what will be coming. And if you want to check out an exchange that is decentralized, operates on the FX platforms, check out SimpleFX. That link is in the video description. No withdrawal limits, no deposit limits. You can deposit $1 million, withdraw $1 million the same day. It's your money. It's kept in cold storage and segregated accounts. It's a different way to trade. You have to use spreads, but it's a fantastic place to trade. Now, their limitations are they don't have a lot of cryptos. It's basically equities, commodities, Forex, but they do have some cryptos there. It's just another option to have in your back pocket. All of us are pursuing financial freedom, so choose what is best for you, but just be aware of what's happening in the marketplace and what's happening with the crypto exchanges. Stay on top of it, okay? I don't want to hear anybody getting their money locked up on some of these exchanges, or or God forbid some exchange goes under or something. So protect yourself, because we're getting close to that precipice. You guys watch this channel, so you're well aware of my macro view. Maybe it doesn't come to fruition. I think it's coming to fruition, but just be careful and protect yourself, protect your money. All right, guys, we got to update some patterns here. The Kepler's triangle, which is playing out beautifully so far in Bitcoin. We got to talk about Dante's Descent. Many of you have been asking me about Dante's Descent. So let's start off, I guess, with Dante's Descent. So is Dante's Descent still valid? So there's three key elements to Dante's Descent we need to talk about, okay? We have the 20 bar tops, as you can see here, 20 bars. In this case, starting at the all-time high to your next swing high, and then to your next swing high before the box transition, right? Then what happened? On our 20 bar top here, this pivoted to the upside. What's interesting to me as a pattern trader is this was still the pivot, okay? So the 20 bars was still a significant pivot, but we pivoted to the upside instead of to the downside. Now, that's one key element of this pattern. The second key element is no all-time high or no high in the previous boxes was ever defeated. So 69,145, never defeated. 48,2, never defeated. And of course, you have 25,207, still not currently defeated, okay? So that element is intact. The third element that's very important is the bottoming pattern. So if we take the bottom of the first box to the bottom of the second box, again, 20 bars, 140 days. If we take the bottom of the second box to that bottom there in the third box, 21 bars, 147 days. Remember, looking at the Gann square of 144 for a market rhythm. So the bottoming pattern still intact, and the previous high pattern is still intact of not being breached. What's not intact is this is not the top to top pattern at the current moment. Now, this is on the weekly time frame, but what is intact is these 20 bars are giving you a major pivot every single time you come out 20 bars. But if we look at this on the daily time frame, so you can see we have the daily when we zoom in, 138 bars top to top, 140. And what I did was I put a mini box here for where we had our beginning of our top, 86 bars. You know, remember Fibonacci number here would be 89, right? 86 bars top to bottom. Now, what's interesting about this is if we go ahead and draw this last box out here from the bottom, the impulsive bottom to your current high, that current top is 85 bars. So you have 86, 85. Not saying Bitcoin's not going to come back up and take out whatever that was, 24.1 or 24.2. But as of right now, you have 86 bars, top to bottom, bottom to potential top, 85 bars. That's way too early to be a pattern. What is still in place, obviously, is your bottoming pattern, looking at the bottom here, right? Your bottoming pattern of 145, 144. And so the way that I will determine for me is if this pattern is no longer giving us valid information is when we come out to that late March, early April, spring equinox date looking for a bottom, okay? That's the next key step. Or if we take out one of these previous highs, particularly obviously the 25,207. So then we're looking at a different pattern, a different method of operation in this market. But unfortunately, this takes time to unfold. This is why I'm not giving you weekly updates on this pattern, because we don't have any defined new pattern yet. The next pattern that's supposed to hit in this is the bottoming pattern for late March, early April. So this is going to be key to see if we do end up making a bottom here in that time frame. And if we don't, and if we come up and take out 25,207, then yes, I would say this pattern is no longer working, which would be an absolute shame because this pattern gave us 48.2. This pattern gave us this massive drop. This pattern gave us the 28% drop. You know, these are trades I shared with you guys here on YouTube. This is your 64% drop. So I'm interested to see, and again on a weekly time frame, guys, because there's a weekly pattern to start with, you only have 4 or 5 candles. So it's really hard to tell you what potential pattern could be forming, but the 3 key elements are what I'm tracking. The next key element is going to be the bottoming date. And if I find something else going on here, like in the daily time frame, I'll definitely keep you aware of that. But it is interesting that that pivot from the low to the high is the same as the previous box as of right now. But let's go to Kepler's triangle, because this is the current pattern that I'm tracking here on Bitcoin. Obviously, this is a pattern that I predicted back on Friday the 13th of January. I didn't even realize it was Friday the 13th when we did that. We had that compression here to give us our first wave up, and then I said this is going to pump up to 23.1. That was our target. We hit our target. On the 3-day chart, you've only had one candle close above 23.1 on the 3-day chart, and you can see we got just above that 24.080. My previous Bitcoin video, I told you I like this area for a short. I actually posted a short on our Discord here right above 24.080, which is a nice profit because right now you are at 22.992, and of course we had some candles come back down a little bit deeper, so we retraced a little bit higher here. So this was a nice little profit trade. But guys, what Bitcoin's doing, the volatility is blown out. Okay, so your volatility is blown out from these pumps. Equities are retracing some. They hit a peak resistance area, and what Bitcoin's doing now, I told you, had that angle of ascent and is rolling down some. Okay, so this is a 3-day chart. We're going to look at this in the smaller time frame, but as you can see, you're overheated on your MFI, your volume weighted RSI. This is showing you, this is the first time since the all-time high you were overheated on the MFI. If we go ahead and move forward here, looking at this in the Wyckoff structure, looking at your 200 and your 50, lots of YouTubers are going to get very excited about this bullish cross of the 50 crossing the 200 if it completes that, which it looks like obviously it's going to. This is a very much a lagging indicator. You missed this whole pump up. If you're waiting for a bullish cross here, you still don't have that bullish cross, so you missed the whole pump up here. But what we're doing here is going sideways in Wyckoff now. We're just now starting to build our box on the daily time frame. Let's look at this on a clean chart. And on a clean chart, this is your volume. This is clean volume. This is what you want to see in an asset when you have a nice move up. You want to see that accumulation and then a breakout. High relative volume, Williams accumulation distribution line. You can see the big wave volume here. Your MFI pushed up to overbought. Now you're just below your median line. Let's go ahead and look at this with some Fibonacci on here as well. If we look at this from that wave perspective where we have Kepler's triangle, you can see my target here of 23.103 behaving very well, getting turbulence. Totally normal to get turbulence here. But let's look at this a couple of different ways, because one thing I'm looking at here, your volume looks fine. Volatility is wide open, okay? So you don't have an impending move coming, barring some type of catalyst, some type of drop in the market or something in the equity space, and this thing just falls apart. But as you roll over, okay, you've nailed your angle of ascent, finished out. As you roll over, you want to watch for double tops too that can form, okay? And this is where we took our short up here on this pattern failure up here. So let me go ahead and remove that. If we do start seeing some retracement, the area that I'm really tracking here with Bitcoin would be the reverse. Okay, so you have that swing high. You can take a trend-based fib down to that low, up to that high, and this would tell me 14,510 if Bitcoin did start to fall down, if the equities decide to retrace heavily. Okay, so would be my target here to come down to. And if I was looking at this with an ABCD pattern, it would look like something like this. Be about a 100% retracement. So this is 90%. This is just slightly over 100%. But this would be your symmetrical move in the marketplace, just as a target, guys. It can go below it. It can stop above it. But this is a good market symmetry move here. And if I was looking at this from a perspective of, let's add these fibs back on here as well. So that are 382, 618, 486, 786. And let's do, where's the 1272? 1414 1618. Okay, so you're looking at 20,532, 46 at 19,518. This is if it start to break down. And again, you have your Wyckoff structure here on the daily time frame. This doesn't look like it's in any type of imminent threat of breaking down. You're just ranging, okay? Your volatility is wide open. You're ranging here. On the MFI, again, you're just below the median line. Your volume is starting to flatten out here. Your wave volume has died out, but you had a nice pump up from it. So as of right now, you're just watching, okay? You're watching, and what you want to see happen here from that Wyckoff perspective is a breakout above your box, okay? So if you're going to get bullish, you want to see price breakout above 23,462 and pull back. And as you guys have seen with Bitcoin can break out and pull back much higher before it pivots to the upside, okay? But ideally, in typical Wyckoff, you break out above 23,962 and then pull back and then pivot out to the upside. What you don't want to see is if this does something like it just did, okay? Now you have to be careful if you come back up, maybe make a lower high if you start rolling over. But, we could just end up ranging in this range, going up and down for a little while, or we could make a very particular shape like a double top and then look for a neckline break. Or if you do start making a series of higher lows, look for that pivot out to the upside to move up, okay? So nothing's changed really in Bitcoin since last time I made that video. You're at a very confined range of 22.5 to basically 24K. That 1,500 point range is kind of what you're stuck in right now. Equities, again, retracing some after their pump. If they can hold up in their ranges, Bitcoin's going to hold in this range. If equities really fall apart, Bitcoin is going to fall apart with them. Let's go ahead and flip over to Ethereum, guys. Looking at Ethereum, similar chart pattern, obviously, you see this all the time, but I want to go ahead and spread this open and do this, okay? This is a 3-day chart on Ethereum. If we want to narrow down this range of how we are trading here, let's go ahead and put that bottom there. We'll put our top here. And this gives you a better encapsulated view of what Ethereum is doing. Now, if you look at Ethereum from a broader perspective, you have your low, you have your higher low. Okay, so this is that bullish Gartley type structure here in a larger pattern formation. You have Ethereum that made its base and it's up towards its ceiling here of 1678. Okay, so Ethereum, same thing. You want to see a breakout above and then pivot out to the upside. If it starts to lose this and rolls down and comes back up and rolls down, watch for your double top and some lower highs coming down back down to the downside. Okay, but we're going to look at this with fibs as well. Let's go ahead and take a fib projection off this wave to see what our upside possibilities could be. And I'm looking particularly at the market symmetry move at 2224, 2224. And if I wanted to look at this from a triangle perspective, it would look something like this. This would give you this reciprocal move here. And this would basically be your 786. It's not perfect. It's 832. And this would be your 1272, which is one spot 202. But I'd be looking at that target, the 2,224, if Ethereum was going to get more bullish. And looking at the trend-based fib here, if it was going to come out, the 618 looks like a good target to retrace from and then punch up. Okay, that would be my upside target for Ethereum. And conversely, there's some other patterns here actually too. Let's go ahead and look at this another way, because looking at that double bottom Gartley structure, if you use a larger type pattern here, we can go ahead and use our X5 pattern, come up to the top here, to the base, to the heart, and to the second, the higher low. And this would look like just about here. Okay, so here you have almost a 50% retracement. This XA wave down, this retracement back up to the D point would be almost a 50% retracement. So again, key area for Ethereum to flip, and this would be a bearish pattern, guys. Price would vibrate up to point D. This is where you make some type of top and you would reverse in this type of pattern if it was to play out like this, okay? But let's go ahead and look at this on the downside as well and see what we got. So that's the upside. You can pull a downside fib. You can do fib retracements. I'm looking at an ABC projection, was how I want to do this. And we could do a larger wave projection or a smaller wave projection. How should we do this? Let's try this smaller. Let's just see what this looks like. We don't know if this is going to be the top, obviously, for Ethereum, guys. Just looking at some key ideas here. This would be the 760, okay, for the market symmetry move. $760 if Ethereum does this move here. So this move here, as you can see, this is almost a 618 retracement. This B to C from your A to B. You see that? So again, key area for resistance happens to line up beautifully with the way we laid out the Wyckoff. So because it's almost a 618, you'd almost be looking at a 1618 reciprocal move. Obviously, this is not perfect ratios, so it comes out to one spot, 50 basically. And that brings you down to $760. And between those levels, the 46 fib, you'd be looking at 1252. The 618, key one to watch as well, 1126. And as you can see, that would be your base. Okay, that's your base that Ethereum had established here. So if this does start to fail and roll over, watch these key levels. All right, guys, I hope you enjoyed this video, and I'll talk to you guys next video. Next video, I guess, will be Wednesday or Thursday for Bitcoin. And please do like and subscribe. And if you have any comments, questions, I do answer everybody the best to my ability. And I will talk to you guys next video. Take care, everybody.